we have with us Aman Jain, who is graduated from an IIT Kanpur and is one of the founding member of the GyanDhan, and they have assisted more than 1 lakh students in getting an education loan for studying abroad. For disbursement section, Aman, some countries require the loan disbursement before the visa approval.
Yeah.
But banks are really in a tricky situation whether the student will grant the visas or not.
Yeah.
But it's a mandatory.
Yeah.
Take an example of Australia and United Kingdom.
Yeah.
Both we have to disburse the amount before the visa approval.
Yeah.
In that case, so how the banks are taking this as an initiative?
Yeah. See, so it's a very tricky situation, I would say. And this is one of the pain point for the students that we solve at our end. So at times, see what banks want. First of all, let's understand. Banks want money to be given in the proper channel at the appropriate time. Okay. So bank want that, okay, hey, we've sanctioned the loan, but what if you don't get visa? My money will go in when, right?
Yeah.
So bank usually have all of this condition that once sanctioned, you should have your visa. There should be a fee demand letter from the university, and then we will pay. Okay. Now, as you mentioned, there are countries, for example, Canada, you need the money in the GIC account even for the visa.
Correct.
For Germany, you need the money in the block account. For Australia, you need fees to be paid before the visa. In all such cases, we then talk to the banks and get it done under special circumstances that this is the requirement of the university. Okay. So when typically a student approaches the banks directly, they might find it hard to explain it to the banks that okay, this is to be done. But with GyanDhan, because we have been doing it for last 8 years, have done it for lakhs of students. So we understand that okay, whenever we see an application for Germany, we know that block account thing will come, and we upfront have to talk to the banks to get it done. So that becomes our headache rather than of the banks.
After the loan sanction letter and before the disbursement, what would be the process?
Right. See, so many times, many students, parents, once the loan gets sanctioned, they get chill.
Yes.
That everything is done. But that's actually not true. Though you don't have to put that much effort after sanction, but there is a lot to be done after sanction as well.
True.
So to give an example or to let you know the exact process, once the loan is sanctioned, after that there is an agreement that needs to be signed.
Okay.
So there is this loan agreement. Usually most of the banks get it signed physically. So they will courier you the agreement, you will sign it, then you will courier it back if you are not in the same city. Once the agreement is signed, then banks look for post-dated checks. So bank will say, give us 12, 16, 28 post-dated check of this amount that needs to be submitted. Then bank ask you to set up auto debit of the EMIs or the interest from your account, which is typically called NACH, NACH. So you need to set up that, right? Once that is done, if it is a secured loan, I mentioned the mortgage registration to be done. And apart from that, then you have to submit the demand letter from the university. So these all are the things that is needed to be done once the loan is sanctioned. So what I have seen around is that once the loan is sanctioned today, the student think that tomorrow I will get the money. Or not even students, many parents, many admission consultants, they think that, okay, hey, today loan is sanctioned, give us the money next day. It doesn't work like that. You have to do certain process to get the loan sanctioned, the loan that was sanctioned to get the money in the account. And these are the steps to be followed.
Okay, especially when it comes to repayment of the loan. So how the banks are asking the students to repay the loan, whether it's a quarterly or monthly base, or else after the yearly wise, how they are banking so flexible within, especially in abroad education loans.
Right. So there are, as I mentioned, two kinds of loan. One is secured, one is unsecured. So in secured loan is typically from the public sector banks. You don't need to pay anything while you study plus 6 months. So if you are going for a 2-year course, then for 2 year plus 6 months, 30 months, you don't need to pay anything. Your repayment, your EMI starts after you graduate. Okay. So for this 30 months, and this is one of the reason I like secured loan better because secured loan rate is low.
Okay.
Approval chances are higher because you are giving property, and there is nothing to be paid while you study.
Okay.
Though interest will be charged and it will get accumulated with your principal amount.
Okay.
But you need to pay once bank
once
assumes
the
that
course
once
ends.
course ends, you start earning,
Yep.
then you pay. Right? Whereas in the unsecured loan, bank don't want to lose touch with you
Yes.
because there is no property involved, there is no
Yeah.
collateral involved. So typically banks want you to pay a certain amount per month. Now it can be entire interest or interest per month or a partial interest, 5,000 rupees, 10,000 rupees per month.
Okay.
So during study period plus typically 1 year, you need to pay this simple interest or partial interest, and then your EMI starts.
Okay.
So this is typical unsecured loan.
Generally, how much would be the duration amount? I mean, loan repayment.
So you can take up to 15 years to repay the loan. That in the secured education loan. In the unsecured loan, you can take 10 years
Okay.
up to repay the loan.
Okay.
But it's what we have seen around is once a student graduate, they repay the loan in 3 to 5 years.
Okay.
Right? So that is, I don't see that as a very big pain point for the student that even at the time of inquiry, they never ask even this question that how long I need to repay.
Okay. I mean, does the banks ask for any charges for the paying of advancing the loan, completing the loan?
Yeah, that's a very good thing with the specifically Indian banks. I'm not talking about NBFCs. I'm not talking about other players. Indian banks. What I really love about Indian banks, specifically with this respect, is that they have developed the education loan in such a way to help student. Okay. So this moratorium period that I mentioned, right? That in the public sector bank, you don't need to pay anything while you study. Banks understand that while you are studying, you are not earning. How will you pay?
Correct.
Right? Similarly, banks also understand that once you start earning, you are getting a good bonus, good salary, then you can repay it anytime. And bank don't charge you any prepayment penalty. It used to be the case earlier. Even today, when you take car loan, home loan, there are prepayment penalties. But there are no prepayment penalties when it comes to education loan, specifically from the Indian banks.
On that particular rate, they need to pay with an only outstanding
principal plus interest till
principal
date.
Plus. Okay. So they don't take any rest of the 15 years interest.
Nothing.
Yeah. Nothing else. Okay. So generally, only how the banks or to be loaned. I mean, they cover only tuition fees and living expenses, or they're going to cover any other expenses apart from this?
Again, that's why I'm saying that I love the education loan product because everything is covered. Your tuition fee, your living expenses, your travel, your flight tickets, your laptop. If you want to attend any conference, books, everything is covered in education loan, provided you mention it upfront.
Okay.
Right? When you are applying for the education loan, you need to mention that, hey, I am looking for loan, not only for the tuition fee, but also for the living expenses, also for my flight tickets, also for a laptop.
Books.
You give the list.
You give the list. They are ready to give.
They will sanction it, but it cannot happen that once the loan is done and post that you're coming to the bank while applying. You mentioned just tuition fee, and then you're coming to the bank that hey, I need money for my travel tickets. No, it can't be done like that. You need to mention it upfront.
Okay. So is there anything like higher the percentage in graduation, higher the marks in IELTS or GRE? Does it add value more to that application?
Yes, definitely, especially in the unsecured loan.
Okay.
So secured loan, it's same because there is a property. Bank typically don't care about other aspects much as long as they're not horrible. So let's say if you're applying for a secured loan and you have 30 backlogs.
Okay.
So then bank will care about it, right? But in unsecured loan, again, the basic premise is that bank is giving money with an intent that you will get a job, right? So bank know that if the student is sincere, have good marks in 10th, 12th, have good marks in undergrad, have good marks in GRE IELTS, that gives confidence to the bank. So that not only helps in getting approval better, faster, but at the same time, it also helps you getting a lower rate. So I'll give you an example. If your GRE score is 330, versus if your GRE score is 310, if you're applying for an unsecured loan, the 310 guy will get a loan at 12.5%,
Great.
or 12%, and 330 guy will get it 11%.
Okay.
So even if you have a good GRE score, your rate will be lower.
Okay.
Specifically unsecured loan I'm talking about in general. Yeah.
When it comes to unsecured loan,
Yeah.
How CIBIL score will impact the application?
Same thing. If the CIBIL is very good, right, there is a range, right?
Okay.
So if the CIBIL is very good, again the interest rate will be lower.
Okay.
If the CIBIL is bad, there are two things. It is bad enough that they are not approving the loan.
Okay.
Right? So they won't approve the loan. But it is slightly bad. In that case, what will they say? That okay, hey, I know the risk is higher, let's approve the loan. They will charge a higher rate of interest. So then you will have to pay maybe 13% on an unsecured loan. Yeah.
Okay. If education is good, but CIBIL is good, but repayment capacity is poor.
Yeah.
So in that case, anything?
So repayment capacity, you mean the income of the
parents?
Yeah.
I mean,
right. So again, you have mentioned 3 factors. So out of 3, 2 is good.
2 is
you
good.
are good to go.
Okay. So anyhow, most of the banks will sanction.
Yeah.